Well, it was a strong day in the U.S. stock market as we nearly hit all-time highs on both the Dow Jones Industrial Average and the NASDAQ Composite. A big portion of the Dow's gains today were a result of blowout earnings from Coca-Cola, which was up about 6% to all-time highs here today, making a guy in Omaha that you can probably see back behind me on my shelf pretty happy, I imagine. But it's not necessarily that we're out of the woods yet. Keep in mind that the Russell 2000 continues to have a bearish posture, and we also have a lot of earnings results coming up. So anything can shake us off of our trajectory. But as of right now, we do remain bullish with most of the major indices out there. So we're going to take a look at all of that. We're then going to dive into a trade application example from the consumer staples area that had a little bit of a shot in the arm today due to a dividend announcement that it had over the weekend. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 23rd, 2019. First of all, if you are new, welcome aboard. Make sure you go over to YouTube, click subscribe. While you're over there, check out our description area where you can sign up for our email distribution list. In addition to that, we're heavy users of Twitter, as I just mentioned. Make sure you're following me if you're not already. My handle is @BrandonVanZee, and we appreciate those of you that click like and retweet on these Market Outlook related tweets over there. Lastly, we do have a presence on Facebook as well. Feel free to check out our group in the web address embedded in the logo in front of you. So with that, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. This is a simple 4-grid that will allow us to see the 4 major U.S. equity indices side by side by side by side. This allows us to see if there's any differences that might be occurring depending upon the the category of the stock that finds itself in each of these indices. And that is the case, as I mentioned in the intro. The Russell 2000 has this pink background color here behind its current candle. What that signifies is that we have a bearish intermediate term posture according to the market forecast technical indicator. You can see down below the green line, which again is what drives that posture status, has fallen out of the upper reversal zone and is currently trending lower. So to make it a little bit more visually easy for our viewers to see that, we've kind of color-coded the background to help us with that. Actually, Clarence helped us quite a bit with that, and we appreciate his skills. But nonetheless, it makes it a little bit easier for you guys to be able to see, okay, well, we've got a bearish posture here on the Russell 2000, whereas when you look at the postures of the Dow Jones, the S&P 500, and the NASDAQ Composite, the background colors there are still green, and they have been for quite some time. You know, there are people that like to fight trends, and they like to say, well, the stock market shouldn't be going up because of X, Y, or Z. Well, that's always up to them, of course, but the way that we see it with this particular video is we would have gone bullish back here for the first time on the Dow back on June 7th and have remained bullish ever since then. By the way, here is that nice move out of the Dow today. You can see we were up about 0.65%, which got us within spitting distance of hitting that high that was achieved back there on July 16th. Not quite there, but almost back to those high water levels. And again, a big chunk of that was as a result of that spectacular move out of Coca-Cola here today. Remember, the Dow Jones only has 30 stocks in it, so each one of those stocks has a bigger impact than, let's say, each one of the stocks that might find itself in the S&P 500. Nonetheless, we do have continued bullish trends in the S&P 500 here, which was up 0.68% here today. You'll also see that the NASDAQ is fairly similar to the Dow, where we almost achieved a new all-time high. We were very, very close to those highs that were achieved on July 15th in that particular case. So another strong showing there out of the NASDAQ, up 0.58% today as well. Another thing that I would point out is that from a market sentiment perspective, remember that's our orange label and associated dotted orange line on the chart. We don't talk about that as much because this video is a little bit more tuned into those of you that are a bit more active traders as opposed to longer term investors. But remember that this orange line, when it is rising, is perceived bullishly, and that is the case with all 4 of our charts as it stands right now. Let's go ahead and take a look at our next chart setup. This will be chart 4C. As a reminder, for those of you that are premium members of Market Scholars, you do have access to download all of the charts that you see David and I using during our presentations, both here in the YouTube videos and also over in our premium trading rooms that we teach every day for our students. All right, so this particular chart setup is going to look at what we refer to as 3 green arrows. And what we're referring to there is 3 different technical indicators. And when those technical indicators are considered bullish, a green arrow is present. If those technical indicators are considered bearish, a red arrow will show up. And what we're trying to see is if we can find 3 red arrows matching up at around the same time. Right now, we don't have that circumstance. We are very close to it in at least one of the cases, in fact, 2 of the cases, I would say. And those 2 cases are the Dow Jones and the NASDAQ. In those cases, we have 2 green arrows and just 1 red arrow. In the case of the NASDAQ, you can see that we just gained back a green arrow on the stochastics today. That's known as a phantom green arrow because stochastics did not come all the way to the lower reversal zone, in this case at 25. It just went down and then popped back up again. That's actually a sign of strength that the bulls are in control and largely closing their particular index or stock, whatever you're looking at with the stochastics, near the highs of the range. And you can see that was the case here as we closed near the high of today's range and near the high of multiple weeks ranges here on the NASDAQ. So we got that back. That's new information to report for you. But we still have that red arrow there on the MACD, which kind of is referring to the momentum of the stock itself. So we need a little bit of work there, but we're back in that territory where if we get a couple of big wins out of some substantial technology-oriented companies, there's a decent chance that the NASDAQ could go back to 3 green arrows here relatively quick. The Dow Jones has maintained its phantom or ghost green arrow, however you want to refer to that, since way back here at the beginning of July. So it was a little bit different than the NASDAQ from that perspective, but nonetheless, the one that is kind of the thing that's kind of the holdout here is the MACD histogram. You can see we still have a red arrow there as the reading is still a little bit below the 0 line, but it is trending higher. Remember, these MACD bars are color-coded as well, so this is actually a good sign, at least if you're bullish, when you see these MACD bars go from red here to then turn to gray. Technically, you still have a red arrow in place, but what the gray is telling you is that it is starting to round the corner and head back higher, and that is generally a decent sign for those of you that assume that a bounce is on the horizon. So that's where we stand right now. Basically mixed green arrows and red arrows across the board. That wasn't the case as late as yesterday with the Russell 2000, but actually it is today again because now we've got a green arrow that just populated there as price closed above its 30-day moving average. And so really all 4 of our charts right now have a mix of green and red arrows, but the Russell 2000 seems to be the laggard, and the Dow and the NASDAQ seem to be the leaders here currently. Let's go ahead and check out our next chart setup. This will be chart 4D. This is a longer term view. I don't want to spend a lot of time on this, but I did want to point out one thing that did change a little bit here so far this week, which is we have a green arrow. Those of you that were listening to my Market Outlook video on Friday heard me mention the red arrow on last week's candle and how that occurs when you have price closing below, in this case, the 10-week moving average, that orange line that you see on the chart. It's just kind of an early warning sign that perhaps a crossover will occur. Remember, that's what is plotting the background colors of these charts, whether it's green or pink, is determining whether we have a crossover on the moving averages themselves or not. So anyway, when we got the green arrow back so far this week, now keep in mind it's only Tuesday, so this can easily change by this Friday, but as of this moment in time on the weekly candle, we have closed back up above that 10-week moving average, and so that is a positive sign for those of you that want to be more bullish on the small caps. The truth of the matter is the small caps have just largely been directionalists over the last, let's call it 2 or 3 months, just going flat during that time period, whereas the other major indices have much more of an upward tilt to them. All right, let's go ahead and now take a look at some of our 12 grid analysis, starting with chart 4E. As this pulls up, as a reminder, the background colors of these 12 grids will be either green or pink depending upon whether the market forecast technical indicator suggests that the posture from an intermediate perspective is either bullish or bearish. And so, as always, we have a variety of different looking charts to look at. One thing that really stood out to me today was the dollar. I didn't see a whole lot of people talking about it, but nonetheless, I, of course, was busy with my dividend growth investing class earlier today, so I was out of commission for a bit. But nonetheless, this is a big move for the dollar here today. This is another 0.5% of a move right there, and that follows a couple of other big moves that we've had already here in the last 2 sessions. So both Friday's candle, yesterday's candle, and now today's candle have shown a very strong move for a currency. Remember, currencies typically do not move around with as much exaggerated volatility as you'll find in, let's say, a common growth stock or something along those lines. So this is actually a fairly dramatic move here, and importantly, it took out that horizontal resistance area that I had been identifying for you guys here in recent sessions. And that area was, you know, basically right here, right here, right here, and then again right there. Well, this was a very emphatic breakout to the upside. It now puts us in range of a new resistance area that was created back here on, looks like it was May 23rd and then also May 30th. And we're just a hair below breaking out of that range. In fact, the close on UUP, which we use as our proxy for the US dollar, is actually the close is a new multi-month closing high. It's not at an intraday high quite yet, but we could get there as soon as tomorrow. And so remember, that does impact other things like foreign securities and commodities. In fact, over to the right, you can see that gold was down again today. It was down 0.65. I don't want to make too much of it because clearly gold is still in an uptrend. But my guess would be if the dollar continues to sail higher, it will start applying more and more pressure to gold. But I hope that's not the case because I've kind of actually enjoyed looking at some of those gold mining stock charts here recently. We're seeing a lot of interesting price behavior there. So we'll see. You know, right now we still are above a rising moving average there for gold, but we do want to keep our eye on the dollar because that is a developing story, and we are starting to see more and more strength there. You can see that the VIX bounced down fairly strongly today. It was down about 7%. Of course, that occurs when we have a big up day in the stock market like we ended up having here today. So not a big surprise there. Just be aware of it and how it might affect some of your options contracts out there. The U.S. Treasury yield actually rose today. So you can see here that it was up 1.5%, and that of course means the opposite effect on TLT, which tracks the prices of U.S. government long bonds. It was down a touch here today. So those charts are largely just kind of trying to establish a new range right now. They're not breaking out or they're not breaking down from where they've been in the last couple of weeks, but nonetheless, just be aware of that activity. All right, let's go ahead and take a look now at our next chart setup, which will be chart 4F. And this will be our foreign stock markets chart. This will allow us to see what's going on outside of the borders of the United States. And remember, we're doing this on YouTube here, so we do have an international audience. I would say that way more than half of our audience is still in the United States. But nonetheless, hello to those of you outside of the U.S. as well. We appreciate you guys checking this out. So keep in mind that this is the ETFs that track foreign securities in US dollars. So, you know, those of you that are outside of the United States looking at this, your, home index in your home currency may have a different chart shape than what we're looking at here, but it'll at least give us a general idea of how things are settling out there. A couple things that caught my eye here on this particular chart 4F is Mexico continues to be in the house of pain. I identified that last week because I was already starting to become a little bit more worried about that chart as it was bouncing down off of that 30-day moving average and giving us a bearish posture. Again, the background color of pink reminds us that it's a bearish posture. Well, that thing has been in a house of pain. It's been 1, 2, 3, 4, 5, 6 now sessions to the downside, and that is a straight line right there. Remember, this is an entire country index, so for those of you that are in the United States, think of the Dow Jones just going down every single day like that. That's a pretty aggressive move. But if there's a little glimmer of hope, at the end of the tunnel, perhaps it is that we are now starting to sell off strongly enough where we're starting to see these what's known as oversold cluster signals starting to pop up here. Let me right-click on this chart and go to Maximize Sell, and that way I can show you the market forecast technical indicator down below. These little green dots are showing up because the green, the blue, and the red lines are all in the lower reversal zone below 20 in this case, all at the same time. And so for the last 2 days, we have had that signal. Now remember, just because that signal is produced doesn't guarantee that we're automatically going to get some sort of big reversion to the mean type of a bounce, but it might just allow you to reduce your position sizing. If you did take a bearish trade last week when I was identifying that breakdown of support, perhaps now you take a little bit of your profits off and adjust accordingly, knowing that this thing has already made a big move lower for an index right there. Sometimes these things revert to the mean by going higher. When we get back towards that falling moving average, I would look for another bearish trade at that particular time. Other times, the reversion to the mean doesn't take place back to the upside. Sometimes it just goes sideways to blow off some steam. So you'll never know, but just be aware that that's the circumstances we find ourselves in. And as long as you are aware of that, then you have a couple of different possibilities as far as how you're going to establish your next best trade. As far as other types of charts out here, I would say that Australia is the one that is catching my eye as looking the best right now. That's one I have been bringing up here for the last several weeks, along with Russia. Russia is starting to give us a little bit more of a sideways feel, whereas Australia has continued to work. And we put in another new closing high from a multi-month perspective on EWA here today. Not quite an intraday high, but a closing high. And it continues to be a very consistent chart right there. So if you are looking for a bullish trade idea outside of the United States, maybe there's something in Australia that can get you done. Let's go ahead and talk about the United States now. So let's go on over here to chart 4G. And as we're looking at this, a reminder that the chart in the upper left is the S&P 500. The 11 charts that follow it are the sectors that make up the S&P 500. So as we're looking at this, note that the financials had a very strong day. We were up 1% on the financials there. We had an even bigger day on the materials. Notice that the materials were up 2%. And that's a very aggressive move for an entire sector. I have noticed that Nucor Steel, as just one example, had a pretty big bounce here over the last week, and I'm sure there are others. But anyway, that's an interesting setup there because not only is it a big aggressive move and leading the markets here today, but it bounced off of a rising moving average. We closed at the high of the session, which also happens to be a 3-month high. So, keep your eye on the materials. We haven't been talking a lot about them here recently, but there very well may be some opportunities lingering in that particular area. In terms of downside price action, the utilities sold off here today. We actually talked about the utilities in my dividend growth investing class earlier today. That class is now posted. We reviewed one company that has a half a century of dividend increases under its belt, and another company that has closer to about 15 years, but is much more well-known and a much bigger company with a bigger yield. So if you'd like to kind of see what my analysis is on those types of things and see what your fellow premium subscribers of Market Scholars think about that, we would encourage you to go to our calendar and watch those recordings as well. But anyway, utilities, after having a very nice run over the last 3 months, is starting to break down a little bit here in the last 3 days. Interestingly enough, we actually had a bounce out of real estate here today, but real estate had been on the way down for a longer period of time. So it's possible that utilities and real estate are just kind of starting to calibrate a little bit more closer to one another, since they do tend to travel with each other more often than not. So anyway, the utilities and the real estate charts are a little bit more concerning. In the case of the real estate chart, note that we have a red 30-day moving average now, which signifies that price is below a falling moving average. And you'll note as you look at the rest of the charts that is the only one on the board that is like that. I know this one is hard to see, but that's technically yellow that you're seeing right there on utilities. But if prices continue to stay low on utilities for the coming days, it likely will join real estate with having a red tip of its moving average right there. So anyway, that's probably a good thing, by the way, in the end. Remember, while some of you do own a number of utilities and real estate stocks, if you want a really healthy stock market in general, you oftentimes are better off seeing things like the, I don't know, the industrials and technology stocks doing better than more of your interest rate sensitive and defensive areas there. Real quick over here on the internet, let's go over to the sector selector. Remember, I post this on Friday nights. We did have a little bit of a shake-up here. Technology is back on top. Financials went to number 2. And remember, this did not include any information from yesterday or today, but the financials had a very nice day today. So that's kind of confirming that move that we had recognized with the sector selector over the weekend. And then healthcare is hanging in there decently as well. Energy remains the laggard all the way down there at the bottom. Also, since we're over here, just want to say thank you to those of you that click the word like whenever we post those to Twitter. That is how we judge our success on whether these videos are valuable and effective for you or not. So that's why we always encourage you guys to do that. 94 of you did that for me on Friday's video, and I appreciate you. Now, admittedly, we do like to get that number up over 100. We haven't been able to do that very often. We've been close more times than not, but more times than not, we find ourselves on the bottom side of 100 as opposed to the top side of that. So we would encourage you to click like if you get value out of these and you want to see them continue. Now, on that note, we will be making a slight policy change going forward. There will be no market outlook videos on the days when David or I are on vacations, very similar how we handle things currently in our premium trading rooms. When David and I are out of the office, in the past we had tried our best to cover for one another. That's getting increasingly difficult with our schedules, both professionally and personally. Remember, we do these in the late afternoon and early evening, so that affects our family as well. And obviously these videos are free. We do them to try to gain an audience and promotional appeal and different things like that. But you guys aren't paying for these videos, and we don't make you watch any advertising or anything like that. So our trade-off and what we ask you to do is just simply take 5 seconds out of your day, click the word like on Twitter. That's it. We think it's a pretty good trade-off for you guys because these videos do take us about 2 hours to produce. Yes, the video themselves are only about a half an hour, but all of the processing, editing, rendering, sending out the notifications, all this kind of stuff does take a couple of hours at a minimum. Sometimes it takes us as long as 3 hours if the technology is not exactly cooperating. So anyway, just to give you a little bit of background there, we think we're giving you guys a pretty good deal there. If you can click like for us, we'll do our best to continue these videos going forward, but we are always open to changing if we just don't feel like things are going in the right direction with that. So we think that those of you that follow us loyally are doing a great job. We just want to pick up a few more of you fringe folks that do pop in and watch us from time to time. Please do go over to Twitter and click like. And remember, you can do it directly from here from our website as well, along with looking for it pinned to the top of our Twitter feed. And also in the emails we send out to you, we have a Twitter link in there. And it's also within the description area of YouTube. So there's really 4 different places to make it as easy as possible for you to go out of your way to take the 5 seconds to click like. So thank you to everybody who continues to do that, and I hope you continue to do it going forward. Also, I wanted to talk about our trade application example now. As you can see, over the weekend, I posted this tweet that said, after falling off my radar for a few years, TAP, which is Molson Coors, just made an eye-popping dividend hike announcement. It raised it 39%. But that needs to be taken in context since they hadn't raised it for about 5 years prior to that. But anyway, I said it's worth keeping an eye on with a new yield of 4.17%. And here's kind of the view of that particular graph there. It was when the stock was trading at around 54 bucks. Now, a 4% yield on a stock like Molson Coors is nearly unheard of. I don't know if they've ever had a yield that high. But it is a little bit riskier because they had not raise the dividend. As you can see, this flatlining orange line and blue line here are telling us that the dividend was held in check. They didn't cut it, but they didn't raise it during those years either, whereas they were raising it, maybe 8 to 9, 10 years ago. So anyway, wanted you to keep an eye on that, and also wanted to remind you that, yes, David and I do try to tie in some of the things we're talking about on Twitter into our videos here. So if you like that sort of thing, make sure that you are following both David and I on Twitter. But anyway, what I thought we would do with our trade application example here tonight is to place a trade on tap now that we know that it is raising its dividend after such a long period of time without doing so. Hopefully that's a sign of strength from the board of directors there that they are signaling to us. Now if I were to pull up chart, let's call it 4A, and pull in ticker symbol TAP, which by the way I think makes a pretty good mango wheat Blue Moon beer, one of their brands there, but that's besides the point. As you can see, the stock did bounce very nicely today and now finds itself at around $56 per share. So it's trying to stabilize after going lower in price for so long, and I think a big part of that move that we saw today is as a result of the market waking up to the fact that they are now going to be a very high yielding dividend company as well. So what I thought we would do in this case is sell a put on this stock at a lower level and either capture the income that we're going to receive from just selling the put if it continues to go up or sideways, or be willing to buy the stock if it does go lower. You can see that the lowest price it ever achieved here in the last several years is $52.36. So if I come over here to the trade tab, note that there is a 52 strike in the August monthly contracts with 24 days until expiration that is currently available for basically 55 cents right there. Now there are other more liquid contracts, so if you wanted to go to the 50s, there's 1900 contracts there. If you wanted to go to the 55, some of those big round numbers are going to have your bigger open interests. But as long as you're using a limit order and you have every intention of wanting to buy the stock at 52, it doesn't mean you can't go out and float that open sell order at 55 cents. And if you get filled, great. If you don't, that's fine. There's always another trade out there. So that's what I'm going to do here in this case. If I were to get filled at about 55 cents there, that is more than 1% of the strike price, which is something that we oftentimes focus on in my Monday options for long-term investors class. So let me go ahead and click the bid price here. That loads up a selling order where I'm selling -1 of the $52 put for the August monthly contracts on ticker symbol TAP, and I am going to try to get filled there at 55 cents, right in the midpoint between 50 and 60 cents on that. I will change that to good till cancel just in case I don't get filled tomorrow, but remember, when you're selling a put, effectively what's happening is you're receiving money up front, in this case $55, for your willingness to buy 100 shares of this stock at the strike price. In this case, the strike price is $52 per share. So you're thinking to yourself, well, if this stock falls another $4.30, I would be a willing buyer of that company now that its yield is over 4%. So I'm going to go ahead and send that in, and we'll see if we can get filled first thing in the morning. All right, well, thank you so much for joining me here tonight, as always. Of course, we do have a continued bullish posture with the S&P 500, the Dow Jones, and the NASDAQ. And while the Russell 2000 does have a bearish posture, at least it had a nice rebound here today. So we'll have another slew of earnings reports here in the coming hours. So we'll see if that affects markets for tomorrow. But otherwise, things seem to be on the up and up. And I want to wish you all the best of success with your trades and your investments. If you got value out of tonight's video, make sure you click like on Twitter. Thank you so much. Have a great night.